Hi everyone, how's it going today? I hope that you're all safe and well. My name is Wesley Ahara. I'm the Vice President of Education and Membership for the Music Managers Forum US. And just a quick overview of how today's session is going to go. First, I'll give you all a little bit of introduction on the Music Managers Forum and the work that we're doing right now. Then we'll pass the mic to John Funge, who's the CEO of the Music Fund, and he'll give us some background on the company and how they work. Then we'll hand over to Bay and Akash to do a product demo and a little bit of more answers around how the Music Fund works and provides money. And then we'll hand over to Cherie, who's going to go through a market landscape of other kinds of organizations in the music funding space. And then she'll also kick off a Q&A with the Music Fund team. We'll go through and we'll answer audience questions at the end. So if you look inside your GoToWebinar control panel, you should see a questions section. This is the main section that we'll be using to monitor any incoming questions. There is a chat section as well. And if you have any problems, such as you can't hear anything, feel free to go ahead and type in that chat session and send the message to the organizer, which is me, and then I'll respond to you individually and help you troubleshoot. If you do have any problems or you get kicked off or you have to leave, don't worry about it because we'll be recording the session. And then after a couple days, we'll be producing the actual recording and putting it up on the MMF website so that you can watch it afterwards. So to dive in, about the Music Managers Forum, the MMF-US is a 27-year-old trade association for music managers and self-managed artists, but also for all of the people who work in the industry around managers. So our goal is to pretty much help everybody by providing educational, networking and connection, and then advocacy efforts to managers and this whole community. So we've started this Maximizing Monetization webinar series to really help everybody try to understand the best ways to secure revenue, activate new digital revenue streams, find different methods of funding, and all of this is in response to the very difficult times that our industry is going through right now, where we're so dependent on digital, and this is new for a whole lot of people. So all of these webinars are free to everybody, and anybody can attend. So if you have any friends who you think would benefit from these, please feel free to share. Forward emails and so on. Now, we've been organizing these sessions to try to cover everything across all membership fees for the next 6 months. So you can join, access all of our materials for free for the next 6 months, and then pay at the end. So we'd ask that if you haven't yet already joined the MMF, you consider it. And then if you're having a hard time, please don't worry about it. Just feel totally straightforward to go ahead and defer your payment. Now, there are two other things that we're working on right now in addition to this webinar series. One is something called Music COVID Relief, and that's the creative industries organization's effort to get language to support the creative industries into the stimulus bill. And the MMF-US was a successful organization in making sure we got language into that whole stimulus package. So if you want a ton of resources for finding out where to get support, you can go to musiccovidrelief.com. Again, that's musiccovidrelief.com, and that has tons of different ways that small businesses or individual, contractors can, down to artist level, can apply for support. And we do have a couple other things. So we're part of a roadless live stream concert series put on by A2IM and Road Nation. And if any of you who are MMF members would like to submit your artists, or if you're any self-managed artists you'd like to submit yourselves for consideration in these concert series, then there's other information that's announced about that yesterday. But but if you can also check the MMF socials or website, there's more on there as well. Now, I think that's pretty much everything. Again, I'm gonna go disappear into the background, and if you have any problems, type them in the chat and send them to the organizer, and I'll take care of you. So let's hand over to John now. And John, welcome. Thanks so much for providing the huge amount of staff for this session, and then all of the great information and insights that you guys are going to bring. So I'll leave it to you guys, and here we go. John, I think you're muted.
Thanks, Wes. Yeah, thanks for having us. It's a great opportunity. Oh, really? Okay.
All good now.
It says I'm not. Can you hear me?
Can hear you now.
Okay, I think maybe it's just the audio is laggy. Yeah, so yeah. Okay, cool. So thanks, Wes. Yes, so I'm John, CEO of the Music Fund, and my two colleagues, Akash and Bay, are going to be going through the demo, which is far more interesting than me talking. So I'll be quick, but it is worth just giving some brief background on where we're coming from. So our company philosophy is that we automate everything. So everything we do is about automation and using data and algorithms. So the whole idea is that we provide artists funding and you don't have to speak to anyone. And aside from the convenience, the big point about that is that keeps our costs down. And that means we can offer what we hope are the best deals around. And also we can also offer very low amounts potentially, because the cost per deal, because it's automated, is very low. And the other key thing is that we are basically trying to go for scale. So we're trying to make a very large number of deals and to make money on average. So that means it's okay if we don't make money on every single deal. And so that means we can offer features like, if we give you, say, $10,000 for a percentage of your tracks for 2 years, even if we haven't fully recouped that amount at the end of the 2 years, the deal is over and you owe us nothing, even if, say, we only recouped $8,000. So that's one feature that is enabled by that automation strategy. And interesting, where we got that idea from was Akash, myself, and my other co-founder is not on the call, previously worked at an investment firm that did automatic investing, so using data and algorithms for investing in the stock market. And we had the same approach of making a large number of small bets. So it's kind of like the opposite to Warren Buffett, who you may have heard of, who makes a very small number of large bets. And you can think of Warren Buffett as analogous to the big labels in the music industry, the big music labels. They are in the business of making a small number of very large bets, and they're very good at what they do, just like Warren Buffett is good at what he does. But at the other end of the market, this idea of making a large number of small bets, the great thing about that applied to the music industry is that we can offer funding to artists who are much, have lower revenue streams, who are just starting out and are still building up to becoming bigger artists, so we can scale to hopefully to everyone. So with that, I'm going to hand over to Bay and Akash, who are going to take you first through the website and talk a little bit about the website, and then go through the product demo. And hopefully everything I say will make a lot more sense once you see it actually in action.
Okay. Hi everyone. I'm Bay. I'm the artist community manager. Akash, can you share your screen?
I think Wes, can you give us the access?
Okay, so what I'm going to do here is first just walk through everyone on our product offering, so you can get like a high-level idea of what we're doing, and then Akash is going to go through the product demo in detail. So in a nutshell, what we do is we buy artists road. Okay, hold on, let me close my cam. Okay, so what we do is we buy a percentage of artists' royalty income. And in this case, Akash, can you move to the next slide, the next portion? So for artists, you can sell us as little as 1% of the royalties and for just 2 years. What this means is, okay, during this 2-year term, like let's say that the artists sell us 10%, and then they get to keep 90% of their royalties every single month when the royalty comes, and then we just take the 10%. And then right now we're giving up to like $50,000 for royalties. Akash, can you move to the next one? Thank you. So a big differentiator of our product offering is this is a one-time sale. It is not a loan. It is not an advance. So let's say that if an artist sells us 20% of the catalog for 2 years, and then we give him like $10,000 for that, right? And then at the end of 2 years, we only receive $8,000 back. In this case, the artist does not owe us anything. We take the hit. This is a great advantage for artists because that means they don't have to pay us back fully, and then they're debt free. So we also have this thing called big hit protection. What it means is like, okay, if let's say that your track suddenly takes off during the term, we anything we earn over like 10% or 10 times of our investment, you'll get half a back. So I mean, it's very rare, like John said, but in case that happens, you still get something back. Okay. Akash, can you move? Okay, so in terms of how it works on the high level, for the application, the artists just share, their Spotify for Artists and Apple Music for Artists account, and then upload their royalty statements. We send them the offer. Once they approve the offer, we'll send them we send them the money. So it's pretty straightforward. And okay, so this is just some testimonials that we have from of our artists. Can you move to the next one? So here we have like a table comparing our service to traditional advances and label deals. For our artists, you can get upfront cash up to $50,000. You can sell us as little as 1% of your royalties. And it's limited term, only 2 years for now. In the future, we might expand to longer terms, but basically after the 2 years, whatever we purchase will revert back to you. Fourth one, so you owe us nothing. It's not full recouped because it's a one-time sale. It's not a loan, not advance. And this one, okay, so you keep 100% of your copyright. And if you have any future releases, we don't take any royalties from there. You keep 100% of that. We don't charge any fees for evaluation, for processing, no late fees or anything. And then once the closing steps are complete, we will send the money right away. There's no waiting period. There's, for the royalty or something. And and then we don't have a salesperson. Everything that we build is self-servicing. So anyone can just go online and then just complete the application, complete the actual closing process without talking to a person. And then there's one final thing that's actually not listed there is we don't actually restrict of how you use the money. Like for a lot of label deals, they have milestones set, like you have to release certain songs, but we for us, we don't really say, we don't ask you to do certain things. You can do whatever you want with the money. So it's a lot of freedom for the artist. Okay, Akash, can you move down to the playground? Okay, thank you. So we put up this little playground over here. I mean, obviously those are like really big artists, but it gives an idea of how our business model works. So it shows you if you go to any of the artists. Akash, can you click on it? Yeah, and the artists have the choice to say like, okay, if I want to get like $10,000, how much percentage I need to give up for like 2 years. So that's a basic overview of the product and then the offering. Akash, I'll hand it over to you to do, the actual product demo.
Cool. Thanks, Bei. Hi, everyone. I'm Akash. I am the VP of Engineering for the Music Fund. So let's continue to see how this actually works. Let's say you click on that button. This brings up the sign-up page. This is a fairly standard account creation page. It's very quick and easy, just 3 fields, and then you create the account. So let's say an artist has created an account with us. So the first thing that would be presented to the artist would be our application process. So this is where we ask the artist to share their music numbers. First off, we ask the artist to add us to the Spotify for Artists team as a viewer, so just read-only access. The whole point of this is so that our automated system can view the actual numbers for processing the application. So let's say the artist has done that. Then we ask the artist to do exactly the same for Apple Music for Artists. Let's say they've done that. Great. If you click next, this is where we ask the artist to upload their royalty statements. So if the artist is on one of the popular distributor platforms like CD Baby, DistroKid, on TuneCore, we've added some helpful video tutorials of how the artist can download the royalty statements. And if the artist is on any other distributor platform, then they're more than welcome to upload their statements as well. Once they've got the statements in hand, there's a very simple tool to upload the royalty statements, either by dragging or dropping, or clicking on these buttons, and then you click Submit Application. So that's it. Straightforward and simple. And in fact, most of all of the artists have found the application process pretty easy and self-servicing. So once the application is submitted, and once the automated system has generated an offer, the artist would be notified via email to say the offer is ready. So if you see here at the top, if the artist clicks on My Offers tab, then this is where we present the offer to the artist. So as this says, get paid in 3 easy steps, and this is also described by Bei on a landing page. The high-level steps: you choose an offer, you review and accept the legal agreement, and then finally complete the closing tasks and get paid. So I'll go over all of these. So this is actually the main unique feature, as both John and Bei mentioned. The fact that we want to give the artists complete control of how much money they would like upfront, but also how much of a percentage they're willing to share. So let's say the artist wants to make a music video and is looking for I don't know, maybe $20,000. If I can get the So a real-time engine has generated this offer straight away. So for $20,000, the artist would have to give 40% of their royalty income from 26 tracks for 2 years. So let's see what this really means. So this is more details on what's included in the actual offer. As you said, 40% for 20,000 for 2 years. And all the tracks, the 26 tracks, are listed with the ISRC numbers, and also the percentage that we are willing to buy from them. And as Bei went through the features, again, we just want to make sure the artist understands that after 2 years, in this case, the royalty share would revert back to them. In this case, the artist has selected $20,000. So again, quoting Bay's example, if at the end of the 2-year term, if the music fund has only recouped about $18,000 or even less, then the artist owes absolutely nothing, and they still get to keep 100% of the copyright. They get to keep 100% of the royalties from any future releases. This deal is only valid for these listed 26 tracks, and also the big hit protection. So let's say the artist thinks this is really quite a good offer. Let's try to go back and try to see if I can, what sort of percentages I could get. So 60%. So let's say the artist isn't comfortable with that, and if you go down to, let's say, 30,000, 55%, I think it seems like a good value for the artist. So again, reiterating the point that this is completely in the artist's control of really depending on the artist's needs of how much money they want upfront and how much percentage they're willing to give. And as Bay said, there's no salesperson here. There's no pressure. They can take their own time and decide whatever works best for the artist. Before I proceed, John, is there anything else you'd like to add?
No, I think you covered everything pretty well. I mean, I think the slider is basically a down payment on the idea that we want to be able to switch things around. We basically want to price whatever it is that the artist wants to sell us. So as we go forward, we're going to add more options for like selling us longer periods of time, etc. So just basically you tell us what you want to sell, and we'll price it. And it's up to you if you think that's a good deal or not. Then we'll be delighted to go ahead. But yeah, I think you explained it very well.
Great, thanks, John. So yeah, continuing to from this demo, the artist is happy with getting upfront cash of $30,000 for 55% for 26 tracks for 2 years, and again reviewing the details, all the listed tracks. Then we go to the next section. This is where we just ask the artist for the legal name and address, phone number. Let's say they've added that information. Next stage, here we present the actual legal agreement with all the terms and conditions. So if you scroll down, in fact, this is one of the shortest legal agreements out there. So again, here we list the tracks of the ISRC numbers, purchase price of $30,000 upfront, and collection period of 24 months. Again, it's up to the artist to take this legal agreement, look over the details, go over the full agreement with the lawyers or the artist managers, and once they're happy, they accept the legal agreements and they click accept. Great, so now we're on the final step 3 of the closing steps and getting the actual money upfront. Again, the whole idea of the final closing steps is just for us to make sure we are dealing with the right person, mainly fraud detection. So these steps are very few and very simple and straightforward. So I'll give a very high-level overview. So as a step 1, for ID verification, we ask the artist to upload their government-issued ID. And as a fun exercise, we've added this feature where we ask the artist to record a short video reading out 5 random words that we auto-generate, which are unique to each user. In fact, all the artists who've gone through our platform have really enjoyed making these videos. Then we ask the artist to send us a direct message with a 6-digit verification code from the official Instagram account. Then, because in this case the artist is on DistroKid, we ask them to set up the royalty splits on a DistroKid by adding us as a band member or a teammate with the appropriate royalty share. Once they've done that, step 3, we want to make sure they keep sharing their music with us in terms of Spotify for Artists team and Apple Music for Artists team. So if the artist has already done that previously, nothing more to be done on this step. Final step, for tax purposes, we want to make sure the artist has filled out the W-9 form. And that's pretty much it. So, again, the idea of our automated system and tool is that, all of these steps are self-servicing. The artist can take, their own time to log back in, do this as quickly as they want to, or, doing it in their own time. And these statuses update in real time. So as soon as they've done the steps, our automated system would update the artist if the verification steps are all good to go. And once that's done, they'll get the money in their bank account. That's it. John, would you like to add any final thoughts on the product demo?
No, I think again, I think it's a great summary. I think just to reiterate that we have had several artists go through this, and they've managed to do the whole process very quickly. We've had artists come to the site, get an offer, and take money all within like a day. So it's it's a very simple. The goal is to make it very simple and straightforward. We want to kind of be like, our goal is to be kind of like a bit like SoFi, but instead of uploading your personal finance statements, you're just uploading your royalty statements and getting offers and financial services based on your royalty income instead of your own personal financial history. So we're just trying to make it as straightforward as possible.
Great, thank you. I think that's it from our side.
Yeah, cool, very good. So yeah, I guess Cherie, I think
yeah, can you hear me?
You. Yes.
Good? Okay, awesome. Yeah, really glad to be here. This is a really interesting topic, looking at the wider market of kind of DIY microfinancing for artists on the recording side. And so what I'm going to do, I do want to devote most of the remaining hour or so to Q&A, but I just want to give a really high overview of what is happening in the market right now in terms of what other companies, including but not limited to the Music Fund, are offering these kinds of advances for artists. So let me just share my screen. Okay, great. I'm gonna turn my camera off. Okay, cool. So this is a list that I have actually put together for my own Patreon page for my newsletter and for my own writing, but I thought I would make this open to all attendees here as well, since it's super relevant. I wrote a piece recently called The Democratization of Record Label Advances, which was looking at how historically, if an artist, say, like wants to make an album, they've achieved a certain level of audience, a certain level of exposure and fandom, the only place they could really go was to a record label, who would then give them an upfront advance, but in exchange they would get a really unfavorable deal for them. I don't have to go into the details of that. I'm sure a lot of you in the audience are familiar with that, but usually the artist is giving up a lot of copyright ownership. They don't get to keep a majority of their revenue, and etc. Whereas now, so this is a select list, non-exhaustive list of companies that I found are offering advances on streaming or recording income, targeting the independent and DIY artist community, who traditionally, historically, never had access to that kind of very historical institutional capital. And there are a couple of things I want to point out here. So one, there are a bunch of columns here. So this column, company type. So the Music Fund is actually one of the few startups or offerings out there giving capital to artists that's fully independent. The vast majority of companies on this list are either distributors, independent third-party distributors, or even major labels and publishers themselves, interestingly, that are offering advances or similar kinds of deals to their own customers or to their own clients. And so there is an aspect of opening up this capital to many more artists than before, but it is selective, and there is a customer acquisition play on the distribution side, as they're also trying to be sustainable as companies. I put here, this is all, I guess, taken from publicly available information or my own conversations with these companies. So some information is missing, but a lot of these companies also partner with third-party finance or VC firms to fund these advanced programs. Most recently, I think STEM is the distributor that most recently launched their own advanced program. It's called STEM Scale, which I just have open in a tab here. And they also have a slider on their page where you can, I guess you can kind of experiment and play around with, given your average monthly income, what is the fee that you'd have to pay on their advance. So they have a different model from the Music Fund in that they're charging a flat advance fee on top instead of just taking equity. And if you just like sliding this left to right, you can see the fee can be as low as 5.25%, which you see in the middle, the bottom there, or as high as 24%. And I know for STEM, it goes as high as 25.5%, I believe. And so, yeah, so that's just something to keep in mind as well in terms of, with STEM, they're partnering with CoVenture, which is a VC firm that has historically supported a lot of companies trying to open up financial services to underserved people, including creators and musicians. So that's just something to keep in mind as well in terms of whether the companies on this list are pulling from their own capital or pulling from outside capital, in which case some other incentives might be at play in terms of what kind of return they want to make on their advances. And then the last thing I want to drive home, again, this is all like publicly available information, so some of it is missing, but even just in terms of the public information about the amount of capital that's being poured into this space, it's already a significant, like a really significant percentage of just how much income DIY and self-releasing artists are making in general. So I believe it was Media Research and Amuse last year, in a report, they pegged annual global income for the DIY and self-releasing artist community at around 643 million. That's as of May 2019. And you're seeing here, so these are the two of the only companies that have released public figures on the amount that they're paying out in advances. So TuneCore, which partners with a music financing firm called Lyric Financial on their advances, has paid out $20 million in advances to TuneCore customers and clients to date, and that's over the last 2 to 3 years. And then STEM only launched a couple months ago, but at least in their official announcement, they said that they are going to be deploying over $100 million in capital thanks to this partnership with CoVenture. And we can go into more detail about the Music Fund, but they've given out over $100,000 in advances. And so while all these other fields are blank for now because that information isn't public, I think either two things. One, each of these companies is already giving out close to, close to 7-8 figures worth of advances to their customers, or they will be getting to that point by the end of this year or early next year. There's just also a lot more awareness of this space, given the current situation, of course, where a lot of artists are looking for working capital that's just totally off the table because a lot of shows have been canceled. And I just want to highlight here Sound Royalties, which is a company that has gotten some controversy in the past because I believe some of the fees on their previous deals went as high as 30%. And so it wasn't the friendliest kind of deal out there, but they now have a no-cost advance program as well that I believe anyone can apply to. Yeah, so those are the main points that I think will drive the rest of today's conversation. The fact that there is just so much money pouring into this space, like a really significant chunk of the income that's coming in globally from DIY and self-releasing artists in general, will also be coming back out in the form of advances. There are a lot of different kinds of music companies and tech companies that are realizing the opportunity for innovation and disruption in this space and are really investing heavily in it. And I think we'll see a lot, even more activity in the coming months. Yeah, and so with that, let me go back to, let me stop sharing my screen. Okay, great. So, so my first question is related to everything that I just showed, John, which is what do you think are some of the most important differentiators for the music fund from this vastly growing, sprawling landscape of financing options that are now available for artists out there?
Well, firstly, I think it's fantastic that artists have so many choices. I think that's you know, we're very happy to see lots of different choices, because there are many artists in many different situations, and different types of deals will suit different types of artists. I think, as we sort of alluded to earlier, I think the big thing, the reason that someone might be interested in the music fund is because of the fact that they're not taking on any debt. Like, we're just buying a portion of their streaming for a period of time, and once that is over, they don't owe us anything, even if we haven't recouped that. Obviously, the other side of that is that we do share in the success of the track, so they are giving up some upside. However, because we don't take any of the future music, the portion of their income that is going to us, assuming that they're releasing new music, is sort of going down over time, and then ends at the end of the deal. So it's going to, for some artists, I think it's going to be appealing. Other artists may prefer some of the other deals, and that's fine. We think it's fantastic that there's choices.
And then one point of your deal structure that I think I would love for you to elaborate on, I think is also important to clarify here, is that the advances are coming on artists' back catalog, or like only on tracks that are 2 years or older, which is like different from a traditional label advance, where they're taking a much higher risk, I guess, but also betting on feature rather than past catalog.
Yeah, so I think I think that's where the music companies bring value, is that they do, as we said earlier, they are willing to make a small number of large bets. So they will make large bets on a small number of artists, and they will really push those artists, and that is their business model. Interestingly, I think because the money we give out, we don't necessarily get it back. Like, we are willing to take that risk on the artist, that we will give the money, and we are taking some risk that we won't be paid back. So that's the risk we're taking, and the benefit is obviously we do share in the success if the artist is successful. But yes, we only taking back catalog, nothing, no rights in anything that hasn't been produced yet.
Cool, great. And as I mentioned earlier as well, you're one of the few independent companies in the sense of not being tied to a distributor, or not being like built as a service in-house specifically for a company's existing customers. I would love to hear your perspective on both the benefits and challenges that come from that. So, like, as an example, I noticed in the demo that as of right now, there are only a handful of distributors you work with. I think CD Baby, TuneCore, DistroKid. So that's just one example that comes to mind.
Right.
But
So the big benefit is obviously, it's like, so one of the downsides of taking money from through a distributor is that then you're kind of locked into that distributor until you've paid it back. And I think the distributor has the genuine incentive to help artists and to provide funding, but it does also benefit them that artists who take money are then locked into their platform for the period of until they've paid things back. So they do get that benefit. So with us, we're distributor agnostic. We don't care which distributor on. However, we do need distributors that support splits, because we do rely on that infrastructure to getting paid. So DistroKid has been a fantastic partner for us in that regard, because their split infrastructure makes it very easy to set things up. The downside of using us is that it is slightly more clunky. Like, the nice thing about if you're taking money from a distributor, they already have the information about you. So you don't have to upload your statements or any of that kind of thing. I mean, we've made it as seamless as possible, and we're continuing to make it seamless. And we're in constant talks with the distributors about how we can make that even simpler. And they are providing us some additional. Some of the distributors are providing us additional facilities just to make it easier and easier. And we will continue to partner with more and more distributors.
Great. And let's see. Okay, this is a more like higher level market question. I want to dive deeper into this notion of these independent financing options potentially eating into the traditional historic model of financing. This is a question that's come up a lot in my conversations on this topic, is to what extent, now that an artist has so many options in front of them potentially for getting funding for their next project, whether that means that they might walk away from a major label deal, or it might take away future market share from major labels. I'd love to hear your thoughts on that.
Yeah, I mean, I think that it definitely, I think if we're successful, it's definitely revolutionary in terms of how things work. I mean, the goal that we would like to see is that an artist, when you're starting out, you manage to get a little bit of traction on Spotify, Apple Music, and then you can leverage that traction to get some money up front that then you can invest in your career to take things to the next level. And then you can remain independent if you want to, which previously has not been an option. I think the great thing about streaming is that it's lowered the bar. Like, anybody can now upload their music to DistroKid, and DistroKid will put their music on Apple Music, Spotify, and you can just start getting fans, getting money, and it's made it very easy. The downside of streaming, as compared to like the CD days, is that the money comes in slower over time, and so I think that's a challenge when you want to take that money and invest in your career and really take it to the next level. And that's the problem that we're trying to address, is now you don't have to wait 2 years for that revenue to come in before you make your next album, make a new video. You can get it now, and you can make that new video, and you can make new music, and you can start getting revenue right now from that new music. But having said all that, I do think, like, as I said, we're fully automated, and so we don't have the ability, like the music labels do, to nurture and promote talent. So I think at a certain point, I think that it probably still makes sense for artists to leverage that skill set that the music labels have to nurture and use their connections and use their advice and their network to really make you a superstar, and you know, to do the magic of whatever the magic they have in terms of like really pushing people to the next level. So we see the services of the music labels as very complementary.
Speaking of that, this is a more practical product question. So is it possible for indie labels as an organization to upload their catalog and apply for an advance from the music fund?
Yeah,
so
that's a fantastic question. We don't have that available right now as a fully automated kind of procedure that an independent label would have to contact us to do that. But we do see the label in small independent labels. Again, we feel the value that they bring to the world is the fact that they can nurture and promote talent. We don't think that the value they bring so much is getting money from back catalog. So it makes sense for them to sell us the back catalog, and then they can take that money and they can use that and invest that in what they do best, which is finding new talent, new artists, and promoting them and making everybody more successful.
Yeah, super interesting. That possibility of kind of fragmenting the different services that are currently bundled within a traditional label deal.
Yeah, I think some of the services that the labels currently provide, especially the financial services, are more a historical accident than any sort of inherent reason for it. There's good reasons why it started out that way. When you know, obviously when it was much harder to get into the music business, there was not many people who understood the music business, and before streaming there was no data, so it was all sort of gut feel, like people, you know, listening to the music, trying to figure out, like, you know, okay, it makes sense to invest in this artist. But the great thing now about streaming is there's huge wealth of data, so we don't need people to be using their gut feel anymore. We can just look at the data and say, well, what does the data say about the risks around giving money to this artist, and we can just let the data decide. So we can separate out that financing piece and allow the labels to concentrate on what I think where they really bring value.
Great. And going to a point that you were making before very briefly about how, and this is nothing new in the industry, like different kinds of deals will fit different kinds of artists best. I think we're seeing some of that nuance come up in this space specifically of financing for streaming income for independent artists. Can you speak to what kinds of artists would be particularly well suited for a deal or for an advance from the music fund, given their career profile given their, I guess, cadence of releasing music, things like that?
Yeah, so I think right now we're very much focused on artists who are new and up and coming and really want to get money now that they can invest in their careers without giving up either a lot. They don't want to give up their entire monthly income. Their monthly income's still important to them, but they're happy to give up 20% of that so that they can get the money up front now, so they can make a new video to really push their careers forward. And they're continuing to release new songs, so that the overall portion that we're getting is going to be going down. Longer term, we're also very interested in artists at the other end of the spectrum who perhaps looking to retire, or perhaps even like ex-band members who have a share of royalties and they just want to cash out perhaps, and take the money to pay off a mortgage or whatever it is. As Bei alluded to earlier, we don't you can do whatever you want with the money. We don't place any restrictions on it. But right now I think we're definitely focused on the up and coming artists, and that's where we've seen the most traction is among those up and coming artists who really want money now to make a video, or prior to the current situation to go on tour or something like that, which hopefully will come back. Yeah,
definitely. Cool. I think that this is the last question I want to ask before maybe opening it up to audience questions. But in doing research on this space, I've noticed that this kind of microfinancing is already very much the norm outside of music, or so in actually just in the past maybe like 3 to 5 years. Also, there are like a lot of e-commerce companies like Shopify, which a lot of musicians and artists are on. Membership companies like Patreon. Payments companies like Square and Stripe, which a lot of people in the music industry are also like connected to, that now have their own own kind of capital programs, and they're structured in various ways as like loans or advances, other kinds of deals. You were talking at the beginning about your background at Winton and how this maybe like parallels the investment world. I'm wondering if you've taken any interesting learnings from other companies outside of, but adjacent to the music industry, who are also giving these services to people.
Not specifically, but I think broadly, I think what you're seeing is, again, it's because of the rise of, because there's so much data available, what data enables you to do is price risk. And so previously, when that data didn't exist, there was just no way to price risk. And so I think that the background that we've had in data science and finance, we have learned about, how do you price risk using data? And so I think that we're not the only ones who are aware of that and know how to do that. And so I think what you're seeing with the companies that you mentioned is like Square, they are looking at businesses and they're looking at their revenue streams. They have all this data on how the business is doing. So they are able to realize, what the risk is in terms of offering loans to these companies or whatever other financial services they want to offer. So that this data is informing those decisions, and that's good for everybody, because it means that the costs are very low because everything can be done in an automated way, and it can open up access to financing to people who previously just couldn't get it. Because when you don't have that data, you just have to find someone who's willing to take a chance on you, and that's very, very hard. But if you have data you can point to or other people can look at, then they understand what their risks are, and especially if they can amortize that risk over a large pool of musicians or businesses, then that really is, for any one individual, that's a huge advantage, because then you're able to find people who are willing to give you money, and that's revolutionary.
Yeah, great. I would love to open it up to audience questions. Wes, I don't know if there's a way to address them individually.
I think we've answered just about all of them. So
cool.
really quickly, there are a few important points to, I think, just reiterate to make sure that these questions are answered. So first is that the way that an artist gets paid by the music fund is you buy out future streaming royalties from a release that's already out, and you do not buy out future streaming royalties for a release that has not yet come out. So that's all super straightforward. And then the main function through which you're doing that is by being able to assess the risk around their revenue and things like that by plugging into Spotify for Artists, revenue statements, Apple Music for Artists, and so on. And then
Right.
I'm just looking at a couple other things. So in the instance of, let's say there's a new artist who had a song come out last year, what's the youngest song that you can provide payments or royalty purchases for?
Yeah, that's a great question. So right now, because we're just getting started, we currently require 2 years of history, so tracks that were released 2 years ago. As we get more data and build up more confidence in the model and are willing to take on more risk, we will reduce that requirement. Our ultimate goal, which is still science fiction at this stage, would be able to just listen to the music and use that to decide whether or not we give you money or not. As I said, that's still science fiction. So right now we need the data on how has it been performing in the market. And what you see when you look at that data is initially it can be very volatile. It can it can go up and down a lot. But so that's why right now we say 2 years, because at that point it's been able to settle down a bit and give us a better idea. But we hope to increase our tolerance of risk over time, and as our models get better. The great thing about this is there's this virtuous cycle, because as we give out money, we get more data, and as we get more data, that enables us to understand the risk better, and then we can get better deals and we can give out more money. So there's this virtuous cycle as we keep doing this.
Yeah, and then there's a lot of thought that can go into when a song is 2 years old as well. There's usually the initial spike when the song comes out, and then if it gets something like a music video release date, or if it gets reworked a couple months after coming out with maybe remixes. So after that 2-year mark, it's kind of unlikely that there are going to be those big major events around a song again, such as like a star striking remix, or at the point after 2 years, it would have to be something like a sync, or just a overall growth of the artist that comes with new releases, making sure that the back catalog really grows. So there's a stable position that the artists could kind of guess that their music is going to be making, and it's going to make less money over time than it did from the initial release. And that less money from a release over time is both of your advantages, because it's almost more attractive for an artist team to go ahead and sell off future royalties of something that's not growing much anymore, and then reinvesting that into their catalog, which can grow their entire catalog, but especially make sure that their new releases go up higher with their peaks. I'm just going to look one more time in audience questions.
I think that's exactly right, and it's important to understand that our business model doesn't rely on us having big successes. All that we have to do is price it correctly. So even if we think this 2-year track is going to go down, that's fine. We would just factor that into the model and make an offer based on our belief that it was going to slowly go down over the next 2 years, or however long the term is, and that's fine. The artist benefits because, as you said, they get the money now and they can take that money and invest in new tracks.
Cool. And then there's an annual minimum recommendation of about $10,000 a year in streaming revenue that's on the Music Fund's general FAQ on the website. Is that a hard minimum revenue per year, or is it flexible from there? Could you go lower?
We've definitely gone lower. I mean, again, we're trying to like make things as simple as possible for us, like as this is still fairly new service, and so having those minimums there is just to save everybody time. We don't want a lot of people having to apply and then finding out that the amount we could offer was disappointing. But our long-term goal, as I said earlier, is just to price whatever it is you want to sell. So we will remove those barriers over time. And if somebody wants to go on and they just released their first track yesterday and they want to see what they can get, maybe we could offer them $10 and they're going to say no. But the point is we will just price whatever it is you want to sell us is the long-term goal. But just in terms of getting started, we have put the 2 years and the minimum. Well, right now we have a minimum that we would, as you mentioned on the website, of 10,000. But yeah, those will go down over time.
Cool. So basically, can you, I don't know if you gave much of a background around yourself as well and where you kind of came from as far as your
Right. So
others?
I mentioned, I think we used to work at my colleagues and I used to work at this investment firm, but I also used to work at Netflix. My background is data science, AI. I have a computer science PhD, so I'm very much a technical nerd. My co-founder Thomas, who's not on the call, I guess he's a nerd too, but he's also a musician. He plays in an orchestra. My colleague Bay, who you saw, we worked together in the data science team at Netflix, and Akash, a data scientist again from Winton. So we're very much not from the music industry, which is obviously, I think, our biggest disadvantage, but also our biggest advantage. We did go through the Techstars music program, which was super helpful in terms of getting us deep connections into the music industry. So we have those strong connections now into the music industry, but we're definitely coming at this from a automation, data science perspective, which I think many people are not. And as I said, I think that comes with pros and cons. So, but that's definitely where we're coming from.
And then just two more questions, two-ish more questions. One of the questions is about whether or not you do share your actual predictions for the value of the song and how that's going to go. I'm happy to answer this one on your behalf because I know the answer. But basically, there's the ability to, get the projection that the music fund is going to show people, but it's not always positive because we just discussed that the value of a song over time tends to go down per week or down per, month, lower and lower and lower. And if you look at a chart that shows you that your revenue from a specific song is going to be decreasing, that might not make you happy. And
yeah, so that's one of the, yeah, I mean, that our initial goal, and we still want to be as transparent as possible. And we were initially, like, when we were making offers, we had a whole presentation on, this is our forecast, this is what we think is going to happen. But we found out that some artists made them depressed. And obviously we hope that things are going to go up, but the reality is that, unfortunately, especially like the track is 2 years old, most likely it's going to be going down. But that's fine. The point is that you expect that, and that's what pushes you to keep making new music. But the challenge we had was how to present that in a positive way. But I would add that another one of our goals that we will hopefully get to soon is that we would like to share, because obviously we have to generate a lot of data and analytics to do what we do. We would like to be able to share that with the artists. We have like some really cool data on like how tracks travel around the world, for example, that would be very useful for artists. Like, we could say things like, we've noticed that music like yours does very well in Seattle, say, something like that. Have you thought about advertising in Seattle, touring in Seattle, those kind of things. So our plan is to share those analytics with artists on the platform as soon as we can. So there's definitely a lot of useful and cool insights that we see.
And then the last question is, are there any kinds of platforms from which you would not necessarily accept royalties or revenue? So if there's something out there like a Bandcamp where you might have a lot of like recurring sales revenue over time, or if there's we'll start with
so right now we're focused on streaming revenue, because streaming revenue is where we build models, and it's relatively predictable. A good one that comes up a lot is sync, for example. Sync is very hard to predict. It's sort of often just random connections and random choices, so that can be very hard to predict. But and Bandcamp, as you said, is another one. We currently haven't built those models. We haven't looked at that data. Over time, as we have more data and build more models, we would like to extend to all sorts of revenue, and add those in. It's just like, where do you get started? And the place we've started is in the streaming revenues.
Cool. And then the last question is, do you have any kind of like enterprise level, thinking Orchard accounting or like Fuga, Rasa accounting connections, which could facilitate more simply like a small self-distributed label to be able to come in and work with you guys in the future. Is that a priority now, or where on the priority sheet do you think that falls?
Yeah, so our short-term priorities are definitely around supporting like individual artists, but we have a lot of interest from managers, for example, who have like, you know, maybe like a small roster of artists. So I think then the next focus in the product development will be providing like a manager's portal or some kind of view that so that managers can more easily apply for artists that they're managing. And I think that will naturally lead to even bigger rosters that you might start to see in independent labels and stuff like that. So I would it's definitely not going to happen in the next week or so, but it's on the product roadmap, and hopefully over the next year we can start rolling out some of those features.
Cool, sounds good. I think that's all the questions that we have from the audience. The best way that people on this webinar should contact you is what?
They can send us email at info@themusic.fund or go to our website, which has lots of details about how to contact us. The main thing you just need to remember is it's the music one word .fund, and it's not .com. I think we that's the but hopefully these days people can find websites, and I know that there's going to be links to it on the materials from this.
Sounds good. Cherie, do you have anything else that you'd like to add before we close out?
Yeah, there's just one other thought that came to mind, just thinking about like the wider market. I think it's interesting that this is specific to the fact that companies like the Music Fund are investing in back catalog, because the conversation around investing in back catalog, getting like cash on back catalog or deals around back catalog tends to be concentrated, at least looking at the past couple of years, around like big like publishing catalog acquisitions as an example. And like that was really where the catalog conversation was happening, was focusing was on these really big you know, like 9, 10, maybe even like, yeah, like 10 figure deals. Whereas like now this is a really interesting instance of that same kind of mentality in terms of getting advanced on your catalog, taking advantage of it in a different way on like the very DIY emerging artist level. So I think that's cool that conversation is now spanning the whole spectrum of of artists in the industry.
Yeah, no, definitely. I mean, I think the independent artists have been like very underserved, you know, historically, and obviously the reason for that is without automation and data, there's just no way to scale because there's so many independent artists. So I think that what's changing is the fact that the data is available, and companies like ours are bringing technology to bear on the problem. You know, like the famous saying, I think it was Andreessen Horowitz, about software is eating the world. I think that, you know, it's just another example of where software and data, if you can do things with software and data, it's so much more efficient than having people do everything manually. And that enables people to focus on the stuff that they're good at, which is the creative side of things.
Well, cool. John and everyone else from the Music Fund, thank you so much for joining us today. And Cherie, thanks for the awesome questions and moderation and sharing your own insights with us. Everyone, if you do need to contact the Music Fund again.
Yeah, thank you so much.
Thanks. It is info@themusic.fund. And otherwise, take a look out for your email, your email.
Yeah, the music.fund. Yeah.
When the video from this gets posted. And have a great day, everyone. Stay safe.
Yeah, thank you.
Thank you.
Thank you.
Take care. Bye.
Bye, guys.